Hi, good Sunday morning to you, everybody. This is Anna from HotOptionBabe.com. I have on the screen here a chart of the E-mini S&P 500 futures. This will be the week, probably a very light volume week due to the Labor Day holiday here in the U.S. coming up on Friday. I'm sorry, the weekend starts Friday, but the actual holiday is Monday. So 5th, 6th, and 7th, 5th, 6th, and 7th, the market will be closed. Looking here at the charts briefly on the daily, we're oversold on the daily stochastics, and they are starting to point up. So I do expect, with the light volume and a lot of people, being on vacation, that we're probably more likely going to have an up week than a down. That doesn't mean we're not going to have a lot of chop back and forth, because the shorter term indicators show that we're overbought since Friday's close. But just taking a look at the MACD here, it's slowly crawling up to the zero line. Close this back. Now, also what you notice is the 20-day, the 50-day is starting to cross over the 20-day. Now, that will be quite bullish if that happens. There is a little bit of a bear flag still in place. So that's why in a head and shoulders, we still have head and shoulders everywhere. But you just have to be really nimble in this kind of market and take your profits on either side. If you're if like me and we have in the lounge, we are neither bull or bear, but both, and we try to balance it out and take profits when it goes like it has been very volatile, up 100 points, down 100 points, and then that way. We had a fantastic week last week. I was up myself 20%. There were some people that mentioned 32% to me, and there were some really good numbers last week. We had a really good week. When Friday, what happened is that the S&P formed a double bottom at that Friday's morning and formed a bottoming tail, and we shot up right from that, and that was how that day ensued. It turned around and rallied really big. So if you weren't nimble, you can see this double bottom right here, 1037. It's a perfect line if you draw it straight across. It couldn't be any closer. It's right on the money, and we filled a gap at 1064.50 that had to be filled. What do I think is going to happen tomorrow? I'm not sure. The indicators tell me that we're due for a bit of a down move in the next few days, whether it's Monday or Tuesday. Normally Mondays are bullish, so with that being said, I'm short the TLT and long some SPY puts. So we're pretty much covered either way. We'll play those both the way the market tells us to go. So, and even on the 60, I do believe we are overbought here on the 60-minute stochastic. So we could be due for a nice little dip in the morning, and that we would sell some of our puts. But after this week, after the jobs number comes out on Friday, I would more than likely think, as usual, into the jobs number. It's rather choppy and flat, and then if the jobs number comes in really bad, that could be the start of resuming our wave 3 down, and we probably will go lower than the 1037. So keep that in mind as you trade, and trade without emotion, trade with confidence and no emotion. And Friday it was easy to get caught up in that little bit of emotion that was going on, because it was getting really exciting. It looked like we might have a little crash, and everybody was really but when we saw that bottoming tail here, right here, it was a bottoming tail and a bullish engulfing candle. In other words, this was going to turn around and move back up, and it sure did, and with a vengeance. So we came off 15 handles or more. More than that, with 1037 to 1064, I think it was about 30 handles, a little bit less. I'm not doing my math right now, but anyway, you get the picture. So just trade carefully. I'm going to do another another short video on a couple of stocks that we were in that we did so really well on. And everybody have a great day and trade well.